What is going on, Alpha Hunters? Hope everybody's having a very terrific Thursday. Why is the market so bullish today? Well, yesterday when we had a crazy strong bullish day, after I got off the mic, I mean, the market just kind of ripped higher all day, or the rest of the day, I guess. And there you go. But why is the market so bullish today? It depends on what markets really you're looking at, and we'll get into that. Let's just go through the data that we got this morning because we got some rather important data, and it kind of gives some premise of what we need to talk about kind of today and what to understand stuff. So CPI year over year came in at 3.3%. Forecast and prior were both at 3.4%, so it did come down a little bit. Okay. Core inflation, actually, sorry, that was not correct. That was core inflation. I'm sorry. The actual inflation was 3%. The forecast is calling for 3.1%. Prior was 3.3%. So yeah, core inflation was 3.3%. The regular top line inflation was 3%. The initial jobs claims, this is probably the more shocking one. Initial jobs claims came in at 222K. Forecast was calling for 236K, and prior was 239K. So a pretty substantial drop there on initial jobless claims. And yeah, that was a pretty solid drop there. Okay. So now that we kind of understand what the data was, we take a brief look pre-market. You can see we got that pop, and then it came right back down. Kind of something that we talked about yesterday, but I kind of thought, we might see more of that happen if we got a little bit more reduction on inflation, which we did. The inflation did come down a little bit, and initial jobless claims would have went higher, which they did not. But we are still seeing huge outflows in tech world, and we'll get into a little bit of that. So we did rise there for the first 30 minutes or so of the market day, and it has been sell city since. And if we take a look at the Qs, it has been sell city all day so far. I'd imagine it probably doesn't last that long. Here's a look pre-market. We got that pop, came back down, kind of sideways there, going into the start of the day, and it has been sell city on the Qs ever since. So yeah, interesting. IWM up 3.5%. Look at that gap. That is a huge gap. We'll take a look at this on a daily. This is a monster gap, man. 2.25% gap up there. Woof. DIA, kind of a flat open there. It's rising up a little bit over 0.25%. RSP, there you go. It has come to life. Had a nice little day yesterday. All of these 5 ETFs ended up over 0.9% yesterday. A lot of them were about 1%. Some were up over 1%, but they all were part of the move yesterday. So that is kind of how things look, though, today. And yeah, the RSP, nice gap up, nice run. Looks like it's forming a nice little basing pattern. Wouldn't be shocked if that continues. So we'll see. Here's a look at that daily. You can see that RSP. Yesterday had that nice move the rest of the day. It was getting tight in here, right? We were kind of talking about, man, it's getting real tight in here. And we got that move yesterday for the rest of the day. Nice gap up, continuing higher, breaking these highs that we've kind of talked about, right? These kind of channel highs that we've had. So looking pretty good there on the RSP. What you don't want to see on the RSP is a sell back down the rest of the day, or sell down tomorrow, because then that would look like a big false breakout, and it opens different dynamics. DIA looks pretty good. We were kind of talking about this on Monday when the market was actually kind of trading towards the highs, but then when it sold back down Monday and then Tuesday, kind of checked into these moving averages that were upsloping, and like, okay, you can't go bearish right on top of these moving averages. They might support it and push it higher. And then yesterday we got that push back higher. Obviously, we got that close above these wicks that we've had here over the past month. Looking pretty good. Now we're just kind of at these levels where we've topped out at over the previous parts of the year back in March and late mid-May. So we'll see if we can break through those and get going there. IWM, that monster gap, jeez, that is huge. That is a monster gap. This is another one that's, it's been getting really compressed in here, right? We've kind of talked about this one kind of having this kind of pennant pattern kind of feel to it. And we got that slight pop yesterday. And, maybe there was a lot of funds out there like, yeah, you know what? If this happens, there's a lot more upside in the IWM than downside. So you might have seen a lot of rotation yesterday, kind of in preparation for the data that we got this morning. But that looks pretty solid. I mean, basically just back up to the highs that we've had for the year. So yeah, looking pretty good there on the IWM. Pretty strong extension. I've been saying that I would rather have more exposure to the IWM than the RSP. The IWM and RSP rather than the Qs, just because, the Qs have just been so heavily piled into that at any moment it just pops, and it's, yeah, I don't know. I just don't have the confidence that the Qs can maintain this. That's all. Qs down 1.4% on the day right now. It still has room to come down to at least the 10 EMA, if not lower, to these highs that we did put in here over the past couple of weeks. And the thing I'll say is this is a pretty large alpha day between the Qs, RSP, and IWM, that kind of stuff. Like the difference in performance is hugely different between, how much the Qs is underperforming, how much the Qs is outperforming, how much the RSP is outperforming. So, if you were just take the performance delta for the IWM and the Qs, the Qs are down, let's say 1.4%, the IWM's up 3.5%, so 4.9%. That's a 4.9% delta performance day there on the IWM and Qs comparison. So RSP is about 2.5%, a little bit over 2.5%. So yeah, it's a pretty strong rotation day. It's a pretty strong rotation day. And if we see any statistics come out later today, like, hey, this is what happens if we see this much rotation on days like this, like IWM has like a plus 3% day on days where the Qs was also down over 1%, what happens afterwards? If we get anything crazy like that and it's meaningful, we'll probably talk a little about it tomorrow, and possibly probably send out a tweet about that and probably talk about it in the weekly outlook. So we'll see. The SPY is interesting here because we could definitely form a engulfing bearish candle, which then that would look kind of interesting, because then it wouldn't take much to get back down to the start of the week at that point in time, because most of the week's performance was yesterday. Most of the week's positive performance was yesterday with that move that we had. So if we do sell back down and Friday we sell down just a little bit, that would look like a pretty large upper wick on the weekly, right? So if that happens, we'll talk about it tomorrow. But, we would have to sell down another, how much more would we have to sell down today? Like another 0.5% or so. Yeah, about another 1/3% to get back down to yesterday's lows. So if that happens, we'll talk about it tomorrow. But pretty strong rotation here. And it's a lot of people just coming out of tech. Take a look at the big three. AAPL down 2.5%. Look at that gap down. Look at that gap down right there. Nice little gap down. Microsoft getting hit pretty good today, down 2.33%. Nice little gap down there. Nvidia's down 3.25%. What will be really interesting here on Nvidia is if this is the top right here of this little trend, and we do not keep going higher, that'll be lower highs, which means we will be in probably a good sell down period here, and we could probably see a little bit more substantial pullback, especially if we take out this base here. So if we do top right here on this little trend that we've had going here for the past 2 weeks or so, yeah, I mean, we could definitely see it come lower. And I think it would be a substantial lower, it's a pretty decent sized pullback, not like the one that we had back here in June. I think we'd have like a much more meaningful pullback that, hey, be a good time. All right. VIX. Let's talk about the VIX. This was, really kind of interesting here on the VIX. Not too much movement here. We're seeing a lot of selling out of the Qs. SPY. I know my delayed here on the VIX. It's very difficult to get real. Actually, you can't get real-time data on the VIX on TradingView. Because I've looked into that. It is kind of annoying, but yeah, you can't get that. So if you do have a broker, you can look at real-time data on your broker, or at least my broker has real-time data on the VIX. I don't have to pay for anything, but you can kind of see the morning's movement there, and yeah, I mean the VIX not really moving a whole lot, not popping a lot. And we're seeing some pretty good rotation out of tech, the things that are carrying, and the SPY is negative. So it's kind of an interesting move. Dollar and yields, man. We get to these two. Oof. So the dollar dropped off pretty good. We had a pretty strong move to kind of start out in July. We had a 2-day kind of bounce. All this wound up being was a nice little flag pattern, right? You got a little flag pattern. Moving averages came down, pushed it down. Where does the dollar go from here? Well, most likely, the dollar's going to break down. That'd be most likely my guess. We're going to have lower highs over the past couple months, so it makes sense that the dollar breaks down. I mean, that just makes sense to me. I wouldn't want to play this bullish. I mean, this is going to be a hugely red candle here. I wouldn't want to try to be playing this bullish right now. I don't think I would want to play a bearish either, just because we did also kind of get into this zone that we kind of stopped at the past couple times. So I think DXY, you're just at least waiting here for the next couple days. Gold, yep, continuing its push higher, makes perfect sense. Just kind of surprised it's not up more than it is for how much the dollar's down. But if the dollar continues to drop, which most likely I think it probably will, gold's going to keep running. Yields, baby. All right, let's talk about a 10-year yield. So this wound up being a false break, right? So we had this little high back here from early mid-June, June 10th, and we wound up popping it just barely on July 1st, but it didn't hold. It just threw a wick over it, and we have come all the way back down. We broke this pretty strong low, little base here, and yeah, I mean, yields are, there's not much really else to say. I mean, yields are definitely just going to probably just keep dropping off, which means bonds are going to be looking good. So we'll get to bonds here in a sec. But yeah, as far as yields go, I mean, there's not much reason for them to be extremely bullish on yields right now, I would say. The only thing I would say is we definitely got a pretty solid move reaction from the data that we got this morning. So if we do start to see yields turn around and move higher, which I kind of thought about making that comment here towards the end of June when we were having that little run on yields. But if we see that move happen again anytime here soon, with how much CPI dropped off and jobs data, unemployment data kind of came in lower, much lower than expected this morning. So if we do see yields start to push higher, that'll mean investors are not confident in the bonds. They're not confident in U.S. bonds and yields, and they are pushing interest rates higher, which that is something that we've talked about over the past year. That would not be a good situation. Not saying that that's going to happen. I'm just saying if that happens with the data that we got this morning, that is not going to be a good situation. As for now, yeah, yields are probably just going lower. I wouldn't say they're going to drop off like a cliff, but I would just imagine they keep going lower. 10-2 inversion, looking pretty good. Nice little basing action here over the past week. Nice little move higher today. Not a crazy sharp move, just a little bit of a stronger move higher today. Okay. I would imagine that thing probably keeps moving higher. HYG finally getting over that 77.5 level. Probably will close over today unless something crazy happens. The next kind of zone it's kind of into it is all the way up to the 78, and it's got to get through the 78. This is where it's really kind of topped out here this year, even late December. So yeah, that's about all I got. It's got to get through that. We've talked about that one before. LQD, man. So we definitely have. I'm gonna do it this way. A rising kind of channel in here. There's one, and do that, something like that. Something like that, right? We got some kind of rising channel here. You know, it doesn't look perfect. It looks kind of ugly, but yeah. I mean, if this rising channel is legit, I mean, we can keep rising higher. We're also kind of getting into these highs that we had back in March. Okay, it's about that same level. So LQD, not looking horrible, but I would say this room, it might have more room. So which means yields will probably go lower, but it has a lot to do with how we ended June and started July with this drop off here, and how we have come back, overtaken it, and we've continued to push higher. This is kind of like, kind of like it came back down, grabbed liquidity, and it is off to the races. Kind of feel to it. TLT, wow, TLT. I mean, I'm not smoking crack, right? I mean, we are seeing lower 10-year yields. Yeah, we are seeing lower 10-year yields. So TLT, kind of surprised is not over this hump that we had back in mid-June. Let me take a look real quick at the 30-year. Okay, so that gives you a little bit better picture. So the 30-year is not completely under this little low point from mid-June. Okay, let me briefly take a look at 2 years. So 2 year is dropping off pretty substantially. So the TLT, okay, not quite getting over this hump here from mid-June. I mean, it still could very much do like the LQD, where it came down very sharply, grabbed liquidity, and just maybe is off to the races. Just kind of surprised the 30-year yields are not dropping off below June's low like the 10-year is. So yeah, it's just kind of an interesting one. I mean, it's the yield curve, right? All the different yields across the yield curve, they kind of do their own thing, but kind of surprised they're not a little bit more in sync, some of those longer term ones. So we might be in a period of time where we see that reinversion of that 10 and 2. So we might really start to see this thing run up here and see that inversion happen across the yield curve, which, as we know, history would say that is not good for the equity market. So if we do start to see that, brace yourself. All right, taking a look at sector rotation for the day. I'd imagine we see some pretty good action here. So real estate, look at that move. Real estate, 2.6% up. Woo, man, that is some huge performance there. Utilities looking pretty good, outperforming very nicely as well. Industrials, materials, energies, healthcare, financials, and discretionaries. Discretionaries outperforming pretty good. Staples outperforming, but actually down for the day. Communications underperforming, and tech getting hit the hardest. Okay, as far as intraday, so let's take out the gap, which probably help alleviate some of the noise that we did have to start the day. Energy is actually doing the best intraday. Utilities, industrials, and real estate outperforming pretty good. Materials, financials, healthcare, discretionaries, and staples outperforming as well. Communications underperforming, and yeah, tech just lagging behind big time.